CCHH. So to explain what I'm talking about, the risk to reward. Yesterday, here looking at the 15-minute chart, yesterday, if we were not buying this dip, either risking this low or low of day, there's no other entry. I mean, this dip right here, right? Boom, boom, higher low. If you're not getting in here, there's no other entry for me here that's going to offer risk to reward, a good risk to reward. If I'm buying this breakout here, right here, if I'm buying this breakout and this fails, I am buying the top of this. And then what is my risk level? Here, here, you know what I'm saying? So I'm risking I mean 20+% if I'm buying that breakout level. I go over here, I wait for this sell-off to old resistance area, right? Resistance, broke out, pulled back, held that area. I'm waiting for this level. As long as I'm buying down here, I'm either cutting at today's low or this low, right? So my risk is like 5, maybe 10, 15%, as opposed to buying a breakout or anywhere else on the chart where you're looking at, I mean, 20 to 35%, right? So I'm always using levels. I'm always using wicks or bottoms. There's no point of me just buying and then I see it pull back, just randomly get out, right? You've got to be using levels. That's what I draw these levels for. That's what the volume's for, right? That's what price action. That's what volume and price action is telling us. It's showing us where the buyers or where the players are at and what levels we need to be focused on for entries, right? So anytime we start chasing or buying anything, I mean, you got to wait for that pullback. If you're just buying into a spike, for me, there's no risk to reward. Like, I don't know where my level is, right? Most of the time, I'm using low of day as my risk level. If it's not low a day, it's going to be like a previous day low or something, right? So more than likely, 90% of the time. Now on this 15-minute, I may look for my setup here, right? We're going to get up to this $1.50 area. So we know currently right now, if we're looking pushed, failed, our resistance currently is here, right? Pushed, failed, pushed, failed, pushed, failed, pushed, failed, pushed, failed, pushed, failed. We've pushed. Now, 15-minute, what are we looking for? That sell-off, right? Where do we come back to? Man, I don't know. Do we come back here to this level from pre-market? It's a good chance, right? And then does it line up with anything back here? Kinda, right? Kinda. So, looking, we're in resistance right now. Let this thing pull. Because if I'm buying anywhere up in here, even if the 1 minute looks good, let's see. Like if I'm looking to buy this 1 minute, like, oh, we got to pull. I'm going to buy this and risk this low or risk this low. I mean, yeah, you can, but for me, and maybe this does go higher, but for me, I'm on the bigger time frames, all right? So I know this is already getting overextended. Does it look overextended on the 1 minute? A little bit, but we're kind of starting to get this consolidation, right? So if you're just looking at the 1 minute, this might look good. If you're looking at the 15-minute, yeah, we could have another candle. We could push up here, maybe even break $1.50. But we're coming back down, right? We're already getting overextended. So this is all I'm looking for. I look for overextension, wait for the pull, and try to figure out where this thing's going to pull to bounce at. If this thing breaks up here, well, then the pull is going to be somewhere in this area for me, more than likely, right? So to me, it's just all about risk to reward. If I'm chasing, I don't have very good risk. And maybe risk to reward is something I'll kind of go over a little bit more, because I know exactly how much I'm going to lose before I even enter a trade. So that might be a video I'll do later on to explain how I'm buying and entering, how I'm looking at these stocks to enter.